Mortgage rates have seen a dramatic rise over the last year, going from historic lows to over 7% on a 30-year fixed-rate mortgage. This jump in rates has significantly impacted the housing market and affordability for buyers. In this video, we'll look at what's been driving this mortgage rate trend and what it means for borrowers. For starters, mortgage rates were able to drop to rock-bottom levels during the pandemic, hitting under 3% at some points in 2020 and 2021. This was fueled by the Federal Reserve holding its benchmark interest rate near zero to stimulate the economy. But as inflation surged in 2022, the Fed has rapidly raised its federal funds rate to try to slow price growth. Since mortgage rates tend to track the yield on the 10-year Treasury note, this Fed policy has pushed rates sharply higher over the last 10 months. The average 30-year fixed-rate mortgage is now back over 7% as of October 2022, the highest level since 2008. This has led to a major decline in affordability for homebuyers. At 3%, the monthly payment on a $300,000 mortgage is around $1,265. At 7%, that same mortgage jumps to around $1,990 per month, over $700 more. With home prices also remaining elevated, higher rates have priced many buyers out of the market. This reduced demand has started cooling the overheated housing market of the past 2 years. Bidding wars are less common and price growth is slowing in many areas. But affordable options are still constrained, especially for first-time homebuyers facing these higher rates. According to forecasts, rates may continue to rise modestly. But the pace of extreme rate hikes we saw in 2022 is expected to moderate over the next 6-12 months. Much depends on whether inflation starts to cool and if the Fed eases its interest rate policies. For borrowers, it's wise to lock in lower rates when possible, even if it requires points to buy down the rate. Pre-approvals are still advised so you can act quickly when a home hits the market. And be ready for larger down payments and excellent credit to qualify in today's environment. The rapid rise in mortgage rates has been a shock to the housing market. While further major spikes are uncertain, it's likely that elevated rates are here to stay for this period of high inflation. But for the right buyer, homeownership can still be affordable and advantageous.